REIT or Real Estate Investment Trust were created by Congress in the year 1960. It allows anyone to own or finance properties in the same way the shareholders are benefited by owning stocks. REIT leases space and collects rents on the properties, then distributes this income as dividend among the shareholders. Here in this video, we have put few questions of the investors that also comes on your mind, and also we have tried to solve these questions. This video will provide you some insights into what REIT are and how REIT industry works. So let's have a look to the video.
Then what is REIT?
Real estate investment trusts are investment vehicles that own, operate, develop, manage for finance real estate related assets and allows individual investors to earn income produced through ownership without buying any assets. Let's know more about REITs. REITs were first established in the United States in 1960. The act was registered in India under SEBI in September 2014. It is said that under SEBI it should act as a trust, not as a company. REITs does not invest in vacant land or agricultural land, and minimum amount for the investors should be rupees 2 lakhs. The minimum subscribers is 100.
Okay, but how many types of REITs are there?
Basically, there are three types of REIT. First is equity REIT, second one is mortgage REIT, and last one is hybrid REIT.
Then what is mean by equity REIT, mortgage REIT and hybrid REIT?
Equity REIT is the most common type of REIT where the REIT or Real Estate Investment Trust collects money from different investors like you and me and invest those money to buy or construct companies, institutions, hotels, offices, etc. And in return, they collect rent from them by lending these offices, malls, etc. This portion of the income is then distributed to the shareholders or investors like you and me as a dividend.
Now let us come to mortgage REIT. In mortgage REIT, the REIT or Real Estate Investment Trust collects money from individual investors like you and me. And this money they invest as loan for construction of companies, hotels, institutions, offices, retail malls and many more. Now by providing loan in return, they earn interest from them. This interest is finally distributed to the shareholders as the dividend. In this way, the mortgage REIT works. Now let us come to the hybrid REIT. The hybrid REIT is nothing but the mixture of or the combination of equity and mortgage REIT.
So in which REIT should I invest to get the highest return?
If you want to ask me, then I would like to suggest you to invest in equity REIT. As you can see in the pie chart, around 89.3% has invested in equity REIT, which is maximum number of investments.
Tell me, what are the benefits that we will get if we invest in an REIT?
They are high liquidity. High liquidity, which means easily convertible to cash. Second, diversification, which means that the REIT actually diversifies your portfolio with different assets. Then, low risk. It is comparatively low risky than other investments. Transparency. REIT provides all the information to its investors. The REIT also provides good and stable returns to all its investors.
I am interested in equity REIT. So what are the steps to invest in REIT?
The steps are very simple. First, we have to open a demat account. Then we have to fill in the form of application. Third, we have to mention our demat account number and code. Fourth, once it's accepted, we have to bid with minimum of 800 units. Fifth and the last point is we can increase bidding in multiple of 400 units.
Now finally, we will end our video by informing you about the taxability on REIT. REIT dividend can be taxed at different rates because they can be allowed to ordinary income, capital gains and return on capital. The maximum capital gain tax rate of 20% applies to the sale of an REIT stock.
Well, that's it for now. Hope you like it. If you like it, then Please like, share and subscribe.